What is up, YouTube, and welcome back to another Fridge Financials video, and then a follow-up video to what we did with the 10 best returns and IPO listings on Robinhood. We are back also now with the 10 worst IPOs here. So if you're excited for today's video, feel free to like the video, subscribe to the channel, turn on the bell notifications for all future uploads to make sure that I know that you guys are enjoying this kind of content. And again, think you know the worst IPOs listed on Robinhood, make sure that you comment them down below if you think you know them before you obviously watch the video, so that way it doesn't spoil it and you're not cheating, because where's the fun in that? We're going to go from the best negative return out of the top 10 all the way down to the worst negative return in the top 10. So that's kind of what we'll be focusing on here for today. So it will only get worse for the returns here. So let's jump right into it. Why not, shall we? So coming in at number 10 with a bad negative return is company Braze. Have no idea who this company is. Have never done any research on them, but they were initially listed at $65 per share, and now they're trading at they're trading at 26.62, a percent loss of 59.51% in a matter of almost 4 years. A little bit of a tough one. Again, as you can see, there's a tiny little IPO spike of hopium here, and then it's just like, nope, this company sucks. And for whatever reason, and now it is down to negative. So if you invested in Braze, you would be down almost 60% since the IPO. Again, I have no idea who this company is, but clearly it's not as good of a company as you might think, because it's down 60% since IPO 4 years ago. Coming in at number 9, we have Avid Exchange, where the initial public offering was $25 per share for the investors, and it is currently sitting at $9.86. A nice percent loss of 60.56%. Listed on the same time as Brave, it seems like, maybe things like a month apart or so. So 2021, about a month apart here. Again, a little bit of a hopium spike right there, and then just came crashing on down. And you would be down over 60% of your initial investment if you bought in at the IPO. And again, the point of making this video is not just to be like, haha, look at these companies that are losers. Again, the other video is about how much gains you can get from IPOs. This is showing you, obviously, the other side of it, because there's two sides to every coin. So just be like, there's winners, there's also losers like these ones here. And it does get a lot worse, as you will see. Take a look on to the next one at number 8. We have Backblaze. 1,963 investors got in at $16 per share around the same time as those other two, and you would be down 69% because it is now trading as a penny stock, essentially at $4.89. Imagine buying, some shares at $16. They are now worth $5 or so here. So a nice penny stock that you have as Backblaze. Again, most of these companies, if not, I think all of them, I have not heard of whatsoever. So if you know about them, feel free, obviously, to leave those down in the comment section. Any kind of insight you give me to these companies here. But rather than that, I have no idea. Anyways, coming in at number 7. Number 7 is Figs. Figs, I guess, was one of the bigger ones, I believe, at some point, where people were like, where's Figs? Where's Figs? That kind of stuff on forums. 18,000 Robinhood customers invested, $22 per share back in May of 2021, and you would now be having shares worth $6.09. A whopping percent decrease of 72.32%. That is a wipe of money. Imagine having $22 and now it's worth $6. It's actually worse than the inflation values of $1. As years go on, your dollar is worth less. This one basically just accelerated that process, because it took $22 and, just like a magician, turned it into $6. Absolutely amazing. Coming in now at number 6 is Riskified. Again, never heard of it. A lot of people investing. There's a lot of IPOs, seems like, in 2021 for Robinhood Exchange. And again, you'll see a nice little pump up here for that euphoria. And then just like, this company sucks. It's coming on down to here. You've gone from $21 all the way down to a penny stock at under $5 per share. A loss of 76.55%. You're thinking, Fridge, it can't get much worse. Oh, it gets worse. Do not worry. Hold on to your hats. Subscribe to the channel, share it with your friends, as we are getting in now to the top 5 worst IPO returns on Robinhood since they started doing it. Coming in at number 5 is Brilliant Earth Group. 80,000 investors bought in at $12 per share. There's your nice little momentum play right there. Oh my God, look at the hype euphoria. It is now worth $1.52. It is down 87.33% since September of 2021. So if you say there's a fridge, I need some financial advice, and I'm not a financial advisor. As you know, none of this is financial advice. Well, I can tell you right now, probably this company wasn't a good one to buy into, obviously, in hindsight, right? Again, IPOs are a risky thing to play a part in, because once they go public, you don't know how the market's going to react. Do they love the company? Do they hate the company? So doing your own research before a company goes public definitely will make your life 10 times easier. I can promise you that. That is my not financial advice, informative piece for you there. Coming in at number 4. Number 4 is Teads Holding Group. Initial public offering price was at $20 per share in that 2021 year, where it seems like a lot of people went IPO. I'm wondering if a lot of people went IPO because this is coming out of COVID, and now like the momentum and the hype is real behind the market recovering, pushing higher. So people are saying, why not just go IPO when the markets are hot instead of when the markets are cold? Because you can get more fundraising and use that money. And clearly it worked for some, but it did not work for this one. Down 87.7%. It took $20 and turned it into a penny stock of $2.46 in a matter of 4 years. Absolutely wild. Moving on to the top 3, the Olympic bronze, silver, and gold for worst IPOs on Robinhood to date. And there might be some that might crack this list in the future. Who really quite knows? But coming in at number 3, we have Fractal Health Incorporated, a more recent one in 2024, listed at $15 per share for 2,000 customers to buy into. And it is now worth a whopping $1.81. A percent loss of 87.93%. Oh boy, that is a drop. Look at that. And you know what's different about this one? There was no like fake hype and then crash. It just was like, oh, you're a public? Cool. Right down. Just nope, absolutely not. This thing is guts. That's an interesting ticker symbol there. Fun fact. So now we're rounding off the top 2. And as you can see, we have not broken 90% for a loss yet. And as you hopefully would know, the worst return that you could get for an IPO is a negative 100%. You cannot lose more than what you were evaluated at, right? So if you had $15 per share, it went down to 0. That's a 100% loss. You can't go lower. Unlike the returns that were positive, where they could be over 100%, as we saw, this one, the max loss is going to be 100% because you can't lose more than what you initially put in. So coming in at number 2 is Expensify. Listed in that same 2021 year, 21,554 customers invested at $27 per share. Tiny bit of a pump here, and now it is worth less than $2. You would have lost 92.67%. Literally would have lost almost all of it. And I think this is the problem also is coming into play, is how you evaluate what your shares should be traded at when you go public. You put it too high, people don't like the price, they're going to bring it down. You put it too low, obviously you'll be able to raise a lot more money that way if you're undervalued. So the evaluation models here really do make a difference, because maybe this company, with the books, with looking at the financial statements and everything else, maybe it is worth, like $3-4 a share, and they list at 27. People are like, absolutely not. And they shorted the stock. You can watch the video how to short stocks. They could have shorted the stock down to basically nothing because it's not worth literally anything here. So a 92% loss, but believe it or not, that is not the number 1 stock that has the largest loss. The largest loss, according to Robinhood's IPO listings since they started doing this back at, I'm guessing 2021, is Argo Blockchain. Argo blockchain, 139,454 customers bought in at $15 per share back in 2021. Each share is now worth only 29 cents. It is worth a quarter that you could find on the sidewalk when you're walking in the city. It has lost 98% of the value. Imagine that. 4 years, almost lost every single last penny of your IPO. A little bit of a pump here, could have sold off here, and then probably got shorted to the high heavens, and people didn't like the stock. And as a result, you can take a look and see what happens when that happens here. So that is it for the worst 10 investing IPOs that have been published on Robinhood here. Again, at the end of the day, when you're investing in IPOs, do your own research, do your own due diligence, read into the company, look at their financials, look at how they're growing, look at their products, because that's going to tell you if it's a good company or a company that could lose a lot of its value here. So if you made it far in the video, thank you guys so much for watching. Make sure that you like the video, subscribe to the channel, and turn on the bell notifications, as always, for all future uploads. Hope you're making money in the market and not making investment decisions like this. And as always, guys, I will see you in the next video.